What's up, guys? Wanted to go over a couple of things, man. First of all, as you guys know, we just had that big, beautiful tax bill, or President Trump likes to call it, finally get passed. It got signed into law come 4th of July yesterday, or Friday, whenever that was. But I wanted to share a little bit with you guys from my perspective so you can kind of hear how I'm thinking about this. So, there's a lot of stuff rolled into the big, beautiful tax bill. I've studied it. I looked into a couple of things, but these are the main things that I took away that I wanted to share with you guys. So naturally, 100% bonus depreciation comes back. At some point, they are lowering taxes, whether they're, on lowering taxes on higher income or higher revenue producers and people, and no tax on certain things like weight, like tips and things like that, or up to a certain amount. There's a bunch of different things that hasn't really been revealed. That'll probably come out over time. Naturally, if you're in real estate, or if you have a business, you get a lot of tax benefits for that. I mean, President Trump has businesses. He's a real estate guy, he's a developer. He has businesses that have everything to do with that. So they're going to sign that in. As you guys know, Elon was pretty pissed off about that because he lost a lot of the things that he was getting inside of Tesla. So that hit his business hard. And he saw the fact that there were some other things wrong. Basically, ultimately, it was going to raise the debt ceiling up to, I think, about $3.4 trillion, right, over a specific period of time. So, but the point about that is this: the only people not complaining about that are the people that have investments, the people that are higher income bracket, they have businesses, they have real estate, they have something happening that there's a benefit to all of that. So my opinion is this: if you're in a situation where you have a business, you have real estate, you have some responsibility, you are providing these jobs. So, yes, there is a benefit to you with all of these things that a lot of other people are complaining about, because a lot of people look at the working class. We're all working hard. We really are. But here's the deal. Here's my thought. Why don't you, now that you've been given a bunch of rules to follow, then go play that game, right? So it's kind of simple. If you're going to be a football player, then you need to know the rules of football. You're going to line up, you need a helmet, you need a uniform, you need to wear specific pads. There's a playbook. If you're on defense, there's a playbook. If you're on offense, there's a playbook. And there's rules to the actual game itself. Once they've given you all of this information, uniform, helmet, playbook, position, coach, other coach, manager, which coaches are just managers, or if you're in MMA, whatever, right? Like, then you know how to either win the game or play the game. You don't always have to win the game to play the game. Even if you're on the losing side of the team of a team, you're still in the game. So the fact this big beautiful tax bill is actually a benefit to everybody. To one, most of you guys are business owners, entrepreneurs, you're doctors, chiropractors, dentists, you're professionals, whatever that is. Like, now you need to take a step back, take a look at your business, where you are, and be like, hey, how can I win the game, this new game, and play it with what I have. If you, let's say you're a doctor or you're a dentist and you have a practice, or you have a bunch of employees, now you know how to take advantage of it, right? The R&D version, like the research and development tax credits that you would normally get for your business, you can do that. Buy more equipment, set up another office, hire more people, all the things that are a benefit to you now to be able to play this tax game. You can use it because there's this big, beautiful tax bill that's laying out the roadmap for you to win it. Now, the really what I noticed about this, and you guys correct me if you're wrong, if I'm wrong, all right, is that this benefits people with real assets. Because let's be honest, to lower a tax bill, to have you pay less in taxes, actually only really benefits the people who have real assets. Because I call it like reverse. It's a reverse. I wrote it down too. It's kind of a reverse print way to print money. If I take less from you, then you have more money. So you're going to go spend more money, right? And then because you spent more money, the cost of goods is going to go up. Cost of housing is going to go up. Cost of vehicles are going to go up. Credit card bills are going to go up because people are going to have that extra money. They're going to pay their credit cards off, but they're now going to go use their credit card. So that's going to go up. So those are the big things that people track in everyone tracks it. Housing and credit card and auto, like financing, things like that. So all of that stuff is being played with right now. So this was just another way to have a reverse way to print money. We've already said it. If they print money, cost of goods are going to go up. Inflation's not going to go away. Fed's not responsible for that because of the rates. The president's not responsible for that because of the rates. That is just what's going to keep happening in this country, right? Because that printing money, give it to you or leave you with more of it so you can spend more. Either way, it's going to happen. Here's what's going on with that though. If you're now in this position where you can save, not really save more money, but you keep more of what you have, then now's the time to put it into some investment that multiplies it. But don't put it into more stocks. Don't put it into more mutual funds. Put it into a real asset like real estate, something that's income producing, that's making you money, that's passive income. Because really, the tax benefits, if you didn't notice, they reward capital gains. Like your money makes money on itself. You pay less taxes on that than for you to go off and work and earn your own money, right? Because people who work for their money get penalized by taxes. People who their money makes more money for them, they actually get rewarded. So if you take a look at just that alone with this big beautiful tax bill, one, how do you play the game? Two, what's the real game? It's a reverse print. Next, outside of that reverse print, then you need to take a look and say, okay, if everything's going to go up, where do I want my money? Not in the bank, because my money is going to go down in value as people begin to spend more because they have more. And I need to put my money in something where if I invest my money, let's say real estate, multifamily real estate, people are going to continue to pay their rent. Rent's going to go up. The value of that asset's going to go up because of the rent, and the cost to replace that value, the real estate is going to go up. So that's the game. The only people not complaining about this are the people who have a bunch of assets and businesses. Period. Everyone else is happy. Now, if you're on Medicaid, yes, that's a problem. If you have a contract job or a government job and you're concerned about getting cut, that's a problem. But you have to learn to play this game, right? You can start where you're at. You can start at zero and go up, right? But you probably not if you're listening to this. So here's the things I want to tell you guys. So number one, invest your money. If this benefits you, so start looking at real assets. You can invest with us, you can do it on yourself, but you need to buy a real asset, not a house that you can flip or some property you can buy, like something that you are a limited partner in a big real estate deal, right? Like what we do at Bell Capital, and you get a check every month and you get the tax write-offs and you get the benefits because you're an actual partner in the deal. That is the game. That is a capital gain, capital benefit of this stuff, right? So that's the first one. Invest in real assets. Number two, which is the same, invest in something that is income producing, that your money's working and multiplying for you, not you working hard for it. All right. Number three, it needs to be capital. Yeah, I'm kind of going through these things because I said it. Capital working for you is different from money working for you. You working for your money, right? People who invest their capital get the benefits of tax benefits. No one talks about it. It is what it is. A lot of people know what capital gains tax is versus earned income or ordinary income tax. But the reality of it is, unless you put it in something, your money, which is capital that's been in your savings or something sitting on the side to gain you something, then you're not going to pay the lower tax bill. You're going to pay an earned income, and you got to play that game. It is literally written down for you to read the rules. You just got to do it, man. For real, it's there for you. Next, we talk about that. It's the tax advantages of the capital side of your investments, your passive income, your real estate, stuff that we do. You get the benefits of the bonus depreciation that's being passed back. You get to write off from the cash flow. You get to depreciate the property, all the other stuff that goes along with it, and offset some of your other business income, depending on how things are done. Talk to your accountant about that. And then because of it being a real hard asset, it's a real asset. It is an inflation hedge. So as values goes up on a real asset, that value of the asset gets lifted because it's real. Unlike stocks, mutual funds, bonds, the hyper ups and downs of this market is ridiculous. I think when I saw it today, um, the S&P 500 was down 400 points because something that came out. Dow, the Dow falls 400 points to session low after Trump announces 25% tariff on Japan and Korean goods. Like it dropped there right after he said it. So this isn't this now is to the part to where is whatever happens to your money for your investments, things like that, depending on what you're investing in right now, um, it can be changed just because a message that shot on the internet and then all of a sudden the market has a massive swing. You don't want to play that. We don't have that in real estate. Real estate, this happened. They can announce whatever they want to, but people are still going to pay their rent on the first. Period. That end of story. That's just how it happens. So, what am I saying here? Number one, focus on increasing your income and your revenue. That's going to happen whether you do it or not, whether this big, beautiful bill passed or not. If you have a business, you have a practice, you're an entrepreneur, you're in sales, you're whatever it is that you do, continue to focus on increasing your revenue and then figure out exactly how you can pay less and less for taxes. right? It's not about avoiding taxes. It's about paying the least amount that you can in taxes. Put your money in a place where you can store it so you can invest it. And then when you do, invest it in something that's going to multiply your money for you. Get your money working as hard for you as you did for it. And then during that time, make sure it's in a place that's sheltered. You got the tax benefits, you got cash flow, you got capital preservation. Don't lose money, and it's preserving your capital from inflation, right? The value of your dollar going down while the cost of goods is going up. Like those are the things. And you're having all the tax benefits and advantages that are coming about. Don't let this scare you guys. Don't be afraid of it. Use it to your benefit. The big, beautiful tax bill could be to your benefit if you pay attention to what's going on. Like, don't look at everything and be like, oh, they're taking all this away from everyone. Look at it like, what are they adding to people that if I just looked at that, if you're a business owner, you're already doing it. You're like, man, bonus appreciation, the R&D tax credits, the tax credits are there for me. Like we're already doing that. But I want you, let's look at it more. How can we actually really take a step back and go, dude, this is a game changer. And let's say it's only this there for President Trump, it gets undone in 4 years. We have 4 years to make more revenue, to do more investments, to take advantage of this, and then put down on more assets over that time. So if it goes away, hey, the window opened, the window shut. But during that time, we played the game and we actually won it. Treat it like a season. All right. Whether you're an MMA fighter, football player, baseball player, doesn't matter. But treat your business like a sport and then say, hey, these are the new regulations of the sport. I'm going to figure out how to play this game and win. And when I win it, short term, long term, whatever, I dominated. All right. So if you want me to help you do that, go to bell-capital.com. I'm here for you. You can do two things. You can schedule a call with us, 5-minute call, answer any questions you got with myself or someone on my team, or you can hit get started and you can see the open fund we have right now. Got to be accredited, got to be a good person, great attitude, got to already love real estate, and I want to help you get involved. All right. So let me know what you think about this. What do you think about the big, beautiful bill? I know it's crazy, but depending on what side of the table you sit on, you can play this game and you can make it work. Don't let this stop you. Just figure out how to play the game to win. Anytime somebody gives you something you don't like, figure out how to take what you don't like about it and dominate the game. And then people will stop giving you, they'll stop messing with you. And if you're a business owner, chiropractor, doctor, entrepreneur, whatever, we already understand that. That's why we're in the business we're in. We're in it to win it. We're in it to make money. We're in it to double down and keep our money. And we're in it to multiply money so we can create massive wealth for ourselves and our families. All right. So appreciate you. Have a great day today. Let's get after it. Boom. Are you an accredited investor with $300,000 or more liquid in the bank? I want you to come and partner with me. Look, if you love real estate, passive income, and positive cash flow, appreciation over long periods of time, and you're willing to be patient, come invest with me. Go to bell-capital.com. This is for accredited investors with $300,000 or more in the bank, ready to go. Come invest with me. Go to bell-capital.com.